here's something most people don't know. And this is where most people get the biggest surprise. So here's what lenders are looking for when you apply for an SMSF loan. First, loan to value ratios. Most lenders cap residential SMSF loans at an 80% LVR. So if you want to buy an $800,000 property, you'll need at least $160,000 as your deposit. For commercial property, that LVR drops even further, sometimes between 60 and 70%. Unlike personal lending, lender's mortgage insurance isn't available for SMSF loans. So if you don't have the deposit, you can't borrow. Second, liquidity buffers. Lenders typically want to see around 5% of the amount held in cash inside the SMSF. So if you're borrowing $500,000, they want roughly $25,000 sitting in your SMSF bank account as a buffer. This is to prove that the fund can handle repayments if the rental income dries up or contributions stop. Third, borrowing capacity. Lenders assess how much you can borrow based on 3 income sources: employer contributions, salary sacrifice contributions, and rental income from the property. They don't look at your personal living expenses because the SMSF doesn't have any. But they do shade rental income, usually to 80%, and apply assessment buffers to ensure the fund can service the debt. Fourth, contribution history. Most lenders want to see at least 12 months of consistent contributions flowing into the SMSF. If you've just set up the fund yesterday and rolled over $300,000, that's not enough. They want to see that you've been contributing regularly and that the fund is viable long-term. And here's something most people don't know. Because you're only borrowing around 70 to 80% instead of 95% like a standard home loan, your borrowing capacity requirements are actually lower. So someone who can't borrow $760,000 personally might only need to borrow $540,000 through an SMSF to buy the same property at $800,000. That difference can open doors for people who have maxed out their personal borrowing capacity. It can change everything.